Accounting Setup Manager. Use the Accounting Setup Manager to manage legal entities, ledgers, accounting rules, reporting currencies, and intercompany transactions. Basically, as the name suggests, it lets you manage your enterprise structures for setting up your legal entities and ledgers and associated accounting setups. So it's like a consolidated console wherein you can do a number of things. However, before you do those kind of setup, you've got to plan them well, because later on if you change it, it will have unnecessary impact on a number of dependent setups. Especially the accounting setups such as legal entities, ledgers are base setups. They form the building blocks of your entire implementation. Hence, it's very important that you plan them well before you start defining them in the system. You can create an individual legal entity or a group of legal entities that behave as one and assign the primary ledger to it. You can optionally assign additional ledgers to the legal entity. So what does it mean? So legal entity here refers to a company which is established in a particular country. So you can define a company, or you can define multiple companies. Let's say if you're defining a setup for a corporation which has got legal entities in multiple countries, or within one country itself they've got multiple companies. For example, within USA they've got multiple companies set up, let's say one for East, one for West, one for Central, and so on. You can do that using your Accounting Setup Manager, and then in order to avoid confusion, you can assign one same primary ledger to your legal entities, unless you see there is a real requirement to have a separate ledger. For example, one company is in New Zealand, another is in Australia, so they may probably would need to have separate primary ledgers because they may have separate statutory requirements and maybe different currencies within their ledgers, which is where the requirement for assigning additional ledger comes into picture, which you can call it as secondary ledgers or reporting currencies ledger. For example, if I have a company in New Zealand and I have another company in Australia, the headquarters is in New Zealand and subsidiary is in Australia. So the setup could be, you could have one primary ledger each for New Zealand and second one for Australia, whereas you can define a reporting currencies ledger and assign it in Australian ledger so that it converts the Australian dollar to New Zealand dollars based on a predefined rate that you define, and then post that as a part of consolidation procedure to New Zealand headquarters so that the entire financials can be posted at a corporate level. So that's where this kind of additional ledger can come into picture. There could be multiple other requirements, but that's one easy example that comes to my mind. Now I'm going to take you back to the business scenario we discussed in the last module, and we can quickly discuss this once more out there. Okay, but before that, I'm going to take you to the next point out here. You select the currencies in which you want to account for the legal entity, the level of accounting detail, the accounting method you want to use for that entity, and the detail of your intercompany elimination system and management. So basically, in terms of your legal entity definition, you can have all these additional information assigned to your legal entities along with your ledgers. Okay, now I'm going to quickly take you back to the previous business scenarios that we discussed. Okay, so let's say Mango Corporation here. So you can see Mango Corporation is a large multinational enterprise. They've got their operations in New Zealand with a primary ledger, whereas they've got subsidiaries in Australia, Singapore, India, and China. Each of them have their individual primary ledgers, but then they can have reporting ledgers over here, reporting currencies ledger, and that can post the data in a predefined rate to primary ledger over here. That could be one setup. That could be done in different ways as well, but just to illustrate you the concept of secondary ledgers or reporting currencies ledger, this is how they can be leveraged. Now at this stage, I'm going to minimize this and then we'll go to Oracle applications. I'm going to quickly show you the accounting setup manager. So unless you have created your new user for implementation purposes, I would suggest you to use this user called as operations with a password of welcome. And this user comes in Vision demonstration instance. In other words, demonstration instance will contain demonstration data, which contains predefined setups. So once you log in, we will go to a responsibility for General Ledger, Vision Operations USA, which will have a place for us to choose the accounting setup manager. So we'll need to scroll down and look for General Ledger, Vision Operations USA responsibility. So click on that, it will get expanded. For the first time, it takes around 20 to 30 seconds. Look at that. And then I think you've got to go to setup and then financials, then accounting setup manager, and lastly accounting setups. I guess this is something I've shown you in the previous module as well, but never mind. So here is the place you define your new ledger or legal entities. So if you go to legal entities, you can query an existing legal entity, let's say Vision Operations, and then hit the go button. It's gonna find out the legal entity named Vision Operations, and the legal entity type is, the legal type is legal entity. You can also have a type of establishment. So I'm going to explain you the difference later. So if you look at view details, you can go and see the associated details that goes with this legal entity setup. You can see, so this details, what you can see is exactly the same as your company registration with your statutory company authority for your country. So let's say if this company has been registered in New Zealand, then company's office, whatever details are lying there, it's exactly same as that. You got to define it. Okay. So what's the name of your company? How is your company identifier? So in New Zealand, you've got a New Zealand business number, which is called as NBN. In Australia, it is called as ABN or Australian business number, which is a unique number given to every company to identify it uniquely. Okay, then what is the territory? So in other words, like a country, give there whether it's a transaction entity or not. Then go to registration, which will contain more information about the company. So what's the company's registration number? What is the registered address of the company? Okay, then any associated establishment with that company. Let's say, there are multiple offices for that company. You can define it over here. Contact information of that company. Again, every establishment can contain multiple details, which you can view it over here. So if you click on view details, it's going to take us to establishment window, wherein you can define more information about that establishment. Okay, so now I guess you have to go back, and then here you can define the contact information about the company, intercompany exceptions. So if at all multiple intercompanies are there, any exceptions, history of updates, and then lastly balancing segments. So balancing segment, the concept I've explained to you in the previous module itself, so I'm not going to go into the details of that, but here is a place where you can assign a balancing segment to a company which is coming from the segment you've defined it in your chart of accounts and identified it with a flex field qualifier as a balancing segment. So this is the accounting setup for legal entities. Likewise, you go to other tab, and here is the setup for your ledgers. So you can look for a ledger say vision, operations ledger, and then you can click on that ledger, update options, and there you would be able to see the details, how many different legal entities this ledger is attached to, which is what I was trying to explain you over the presentation slide, that one ledger can be attached to multiple legal entities, and you can see that this ledger has been attached to these many different entities. Okay, and here are the ledger more information. So if you want to update this ledger, you can go here and update it. Okay, and there are a number of associated setups for the ledger that goes in. You can see that over here. Okay, so let's say if you want to update this, you can click on that update pencil icon and you go into that, and here you have the currency, the most important thing, currency, chart of accounts, and calendar. Okay, so these three things are very important, which constitute the triple C for a ledger. And then also the subledger accounting method. So what exactly it is? So it is standard accrual. You've got to attach that, and then a number of accounts that gets attached with this ledger. For example, the entered currency balancing account. And then you go to ledger options, wherein you've got other options you can define, such as other accounts, retained earning account, suspense accounts, rounding differences, trading account, journal reversal criteria set, and currency translation options. How would you like to translate, what rates would apply, and so on. Okay. Then advanced options, you've got journal reconciliation, whether you would like to reconcile your journals automatically. Then budgetary control, if you would like to enable them. And lastly, here is a place you can review all the ledgers and ledger options that you have given so far. And if you're happy with that, you can hit the finish button, which is where it's going to save it into the system. Okay, so that's in summary a ledger definition. Fine, and you can see more about the other related options over here. So once you define a ledger, then you can define the associated secondary ledgers, reporting currencies ledgers, the balancing segment values associated with that ledger, the subledger accounting methods, the operating unit you can associate to ledgers. You can also define intercompany accounts and intercompany balancing rules, and finally the account sequencing. You can attach how would you like to define and maintain accounting and reporting sequencing options by ledgers and reporting currencies. So it's a pretty big topic in itself. So I've explained that to you later on in this course. So we'll probably come back to this screen and I'm going to go more into the forms that we haven't explored. But at this time, you remember that this is how you leverage accounting setup manager to define ledgers and legal entities. Oracle Advanced Global Intercompany System. The Oracle Advanced Global Intercompany System, which is also called as AGIS or AGIS, streamlines the intercompany trading and reconciliation process across ledgers. If you recall, in the previous movie I was also trying to explain you the concept of intercompany accounting and where you require it. Oracle AGIS allows companies to comply not only with legal local regulations but also to follow established corporate standards for processing intercompany transactions between related entities of an enterprise. So basically you can relate your intercompany rules and accounting using the AGIS within Oracle Accounting Manager to do a one-time setup, and then it automates the intercompany accounting. It also provides interactive reconciliation reporting, which allows you to drill down to the details of intercompany account balances so that you can quickly find the source of discrepancies in the balances of each of trading partners account. So I'm going to show you how. So I'm going to take you back to Accounting Setup Manager. And here I've just queried the same ledger, Vision Operations, and opened that in update mode. And within that you can see the second last two entries called as intercompany accounts and intercompany balancing rules. So the first one, it defines intercompany accounts to account for transactions across legal entities. So this is the example I was giving earlier. Let's say you have a legal entity in New Zealand, another one is in Australia, and there are intercompany transactions. So where do you want to define the accounting in relation to that and the rules? This is the place you define that. So you go into this one in update mode, and then you can choose the legal entity to which you would like to define. So let's say there is one Vision Operations. You go into define relationship, and here as you could see you can define the relationship between other legal entities and the trading partners. Okay, so it's as easy as that. And if you click on the details of this one, how it is mapped, you can see that how the intercompany accounts, you can give it such as intercompany receivables account, payable accounts, and whether you would like to use that accounts for balancing or not. Okay, then I'm going to come out of this and we'll go to the second option over here, which is intercompany balancing rules, which is where you define intercompany balancing rules to balance entries between balancing segment values within the same legal entity or ledger. So within the same ledger, assuming that you have assigned a balancing segment to a trading partner, a large trading partner, then this is where you define the rules. Okay, so we'll go into this one and I'm going to show you how that can be defined. So you've got a primary ledger of Vision Operations and the legal entities such as the same linked to the primary ledger and something which is not a legal entity. So let's go into the rules for the Vision Operations legal entity. Here you can define the balancing rules pertaining to your subledger applications for payables and receivables. So let's say I'm going to go into the payables, which is where you can define the balancing segment value, and payables usually deals with the suppliers, is it not? And you can give your debit balancing segment value, credit segment value. If you look at that, so I'm gonna open this one for you, and here you can see all the balancing segments that been defined. Okay, so that's how you go about doing the intercompany setup. This is a part of that. That's not all. There are a number of other things that you've got to do as a part of intercompany setups, including setups in individual subledger applications. Legal Entity Configurator. The Oracle Legal Entity Configurator helps you to conveniently set up and manage your legal structure, legal functions, and supporting legal information in a single user interface. In other words, it's like a workbench which lets you define and manage your legal entity information. It supports global requirements for entering legal entity information. You record the registration of legal entities in several domains, which could be such as income tax or commercial law, and by geographic region with the appropriate government or legal authorities for the purpose of claiming and ensuring legal and or commercial rights and responsibilities. The Legal Entity Configurator uses country-specific fields and names to make the user interface intuitive for users in any region, and you can include additional country-specific information that you need to record for each legal entity. It also provides management tools to keep track of the latest information entered so that you can easily monitor the required registration status for both legal entities and their establishments. So this is something I've shown you a little while ago with Accounting Setup Manager. It's the same form. So let's go back and revisit it once more. So I'm going to cancel the existing form, and then I'm going to go to the tab of legal entities here, and here you can either create a new legal entity or you can pull up an existing legal entity. So let's pull up Vision Operations, and as you could see here, you can update the definition of legal entity or view it, and within that, as we have seen, you can define the legal entity information, the registrations with the local government authority, the establishments associated with that. So it could be the businesses or the locations where this legal entity is doing the businesses, or their associated establishments. And then the contact information for that legal entity. Let's say, who is the company contact? You can provide a communication contact person, a spokesperson, and so on, that information. And then any intercompany exceptions, any history of updates, and balancing segment for this legal entity. So that's the process to update it, okay, which is, you can simply go using the update button, go inside and change the values if you like, and then save it back. At the same time, you can create a new legal entity right from here, which is as simple as that. So as you could see, this is almost like a workbench, and especially very useful to a accounting super user or an implementer to not only manage the definition of legal entities but also the associated ledgers. Accounting sequencing. The accounting sequencing is the numbering of the accounting entries in respect to the subledgers and other accounting fields. It is distinct from document sequencing, which is used to number invoices or payment forms or even sales orders and other fiscal documents such as credit or debit memos. Local regulations may dictate how accounting entries should be numbered. Typically, enterprises carry the journal entries in multiple journals to a single journal ledger for reporting purposes. For example, from subledgers such as payables, receivables, fixed assets, cash management, projects, service contracts, and so on, every subledger generates their own journals. So it's a good idea to have a accounting sequencing structured so as to avoid the confusion. Enterprises manually record the journal entries in journals, which are nothing but the physical books, assign unique sequence numbers for each entry, and transfer the entries to the journal ledger. Sequence numbering the journal entries simplifies this cumbersome task of tracing the journal entries. In terms of sequence numbering advantages, it enables you to have a gapless sequence numbers, sequentially number subledger journal entries. You can generate a sequence number for journal entries created by subledger accounting before transferring them to journal ledger. So you can have sequence numbering unique to each of the subledgers. For example, you may have separate sequence numbering for payables, separate one for receivables, separate one for fixed assets, separate ones for projects, and so on, so that you can uniquely identify those sequences, and all of those journals associated with them. And then when they come in subledger accounting module, there you can consolidate, write your rules, and then transfer them to journal ledger, which is where the entire consolidation happens in your primary ledger. Assign sequencing rules to subledger and general ledger journal entries within the context of a ledger and a ledger currency combination. Then you generate reports based on sequence numbers, and lastly you can sequentially number deferred expense accounting. So these are the advantages of sequence numbering, especially particular to accounting sequences, and its functionalities that you can define it in Oracle applications. So on the right hand side, I've also given you a structured method in which the sequence numbering are defined. So you first define your sequences, and then you define, once you have defined the sequence, then you can also define their sequence versions. For example, you have defined version 1, and then after some time you want to make an update to that, so that's where you come back and use the same sequence and define a new version out of it. Then you can define a sequence context as to what context that particular sequence is being used, and then you can assign the sequences to the entities, for example payables related journals or receivables related journals and so on. And lastly you can define the exceptions. Once you have done that, you can define the sequencing assignments, and that's where the sequences start getting used as soon as a new transaction within that entity takes place. So now let's quickly go to Oracle General Ledger, which is where in the Accounting Setup Manager you've got the place to define the sequence related setups. So if you query a ledger, here you've got in the last one sequencing, and as you could see, the description is define and maintain accounting and reporting sequencing options for ledgers and reporting currencies. And if you go into the update option, there you can specify the ledger name and the sequence event. So when the sequence will get fired, so at the period close, the subledger journal entry, and then you've got posting to the GL journal entry or accounting subledger journal entry. And then you can simply hit the apply button, but you can also create a new context if you like and give it some associated properties over here. So you can give it a name as you like, and then you can also choose the balancing segment to which this context would be applicable.